Hello everyone, welcome to another video. And in this video I'm going to answer the question of how do you catch a falling knife? Stay tuned to find out. Alright, so the question, how do we catch a falling knife and what does a falling knife have to do with the stock market? Alright, so the term to catch a falling knife is pretty much you could call it investment slang. And of course we know a falling knife heads down pretty quick and can cut you, and that's another way of looking at the stock market, right? So when we try to catch a falling knife, that's when we look at our stocks, some of our favorite stocks maybe, and we say, wow, I want to buy this stock here because I think it looks cheap, or I want to buy this stock even though it's going down, I really want to purchase it because it might be my only chance to get a deal on the stock. All right, and that oftentimes results in what's called catching a falling knife. And I have some charts here of some of the companies that are being punished right now. Well, I shouldn't say they're being punished. They actually enjoyed a long upward trajectory as a result of the pandemic. And they're punishing some people now in pretty harsh ways, actually. So first one I'm going to look at is Netflix. So Netflix, we know, was at the start of 2020, it was at about $320. And then we saw as the pandemic raged on up until towards the end of 2021, the Netflix stock pretty much doubled, actually more than doubled in value, right? So it went from 320 to a high of close to $700, right? Everything was good. And then, of course, we see that there was a sharp breakdown that's occurred, right? So it took some time to get up here, but we see that the decline is very sharp and very swift in terms of the time. And that's when we take a closer look, we can see where that term catch a falling knife comes in. So if you were watching the stock market and you saw Netflix at 500, then what you might have done is you might have seen it, and it's possible that you chased it up here. And of course, I'm not going to get technical or ask, everybody has their own reasons for why they purchase a stock. So it could be maybe technical analysis. It could just be they're invested, they want to be a part of the company. Maybe they heard it was a good company. There's a variety of reasons that you might have purchased the stock. But if you got it up here, right, so maybe you purchased it at $675, let's say. Now, the key to being successful in the stock market over time, though, is having a plan. So if you consider yourself a stock trader, then you have a plan that's set in stone. If you're a swing trader, a plan. If you're a long-term trader, you have your plan. And the time to figure out what your plan is before you actually purchase a stock. That way you'll be prepared for whatever happens. But let's say you wanted to be invested, so you had no intent to sell. You were just going to, continue to ride this wave up. Well, now you see that Netflix is falling. And around here, right, you see that there was you might consider this a support area, right? Because it hadn't broken this line for, at the time it would have been about, July of 2020, over a year. So like a year in 6 months, let's say 18 months, it hadn't broken this line. So maybe right here, you might have purchased it saying, okay, I think it's going to go ahead and maybe bounce here. However, once this kind of line was broken like down here, then you know that we were in trouble. And this is again where that falling knife starts in. So if you purchased it here, maybe you bought some, and then as it goes lower, you say, oh, well, you know what? $400. Oh my goodness, it hadn't been that cheap for a while. And then you go here, you say $350. It's definitely going to turn around. $300, $250. Oh gosh, $200. It can't go any lower. And that's where people that participate in the stock market, especially with single stocks, you're taking on this level of risk if you continue to purchase a stock as it's declining. Okay, and that's catching the falling knife. So if your trading strategy, maybe you say you're going to average into your position over time, you're going to put $1,000 a month and keep buying. I mean, that's up to you, your strategy, assuming you have faith and you believe the company is going to actually do well in the long run. When people say the stock market is a casino, it really is one of those where you say it's not really, because a casino has set odds against you. Whereas the stock market, if you look at it from a historical basis as a market as a whole, you'll see that actually there's an upward bias. It's more likely that you were making money on Netflix than you were losing money, right? But then again, it works until it doesn't work. In this piece here, this elevator down, as they say, you can see that's a huge decline. Taking a little bit closer of a look, it's trading at what, 15 times forward earnings. And, I think the growth in the company is slowing down. I think they had a bad earnings report. And over here, it probably was overvalued, right? Because people were just piling into technology stocks. But regardless, Netflix is down 73%, which you can see is definitely a huge thing down. So should you buy it now? Well, that's a question for you to answer. But again, keeping that catching a falling knife in mind, you might buy it now at 182, and it's nothing to say that it can't go down to $100 or even $50, right? So everybody has their own mechanism for establishing their purchases. I know a lot of people like to see some sustained strength, because at the end of the day, if Netflix is heading back up here, then really buying here, whether you buy at 182 or you buy at, 200 or 250 when some strength comes back in, it really will make a negligible difference, right? All right, moving on to another company with a similar story. Right here from the pandemic, we went from $75 to close to $500. So exponential growth right there. And this actually increased in value quickly, very quickly. And then you can see here, it came back down. And this was a pretty dramatic drop here. This was from 500 to about 300. So maybe like a 35 to 45% drop. Bounced here, came back down. So this is looking like an area of support. Came back up again, got rejected, right? So it hit the same upward line here, got rejected, coming down, hits this support here. So this was the opportunity for it to go higher. And then once this went here, it teased it, and then it failed. And then out there is kind of lookout below ever since then, right? So this is how some people, they, can use charts to at least, really just see the trend. That's at the very least, you can look at a trend and say, okay, well, this is moving up and this is moving down. So if I purchase this moving down and I purchase it right here, I can't be upset if it continues to move down, because that's where it's headed. Here's a look at it zoomed in a little bit more. So there's nothing in this chart right now that exudes any interest or excitement in purchasing the stock. I'd say any type of excitement would have to come probably a lot higher, where you start to see some higher highs being made and then some higher lows being made. Not this constant dropping lower, dropping lower, dropping lower. Okay. So again, you'd look here, but this is Roku down 83%. And again, being punished from the pandemic highs. Moving on to Teladoc, another company that was a high flyer during the pandemic. And here, same thing, 2020, of course, we didn't know what was happening. Pandemic was raging, and the stock made huge gains here. This company I know is one that Kathy Woods in the ARK Invest area, they're heavily invested in this company. And this is Teladoc, but you can see again the same thing, this falling knife. And I can tell you, being an owner, not of this specific stock, but being an owner of stocks that are, heading down, that I'm still holding, because I believe they'll do well in the long term, it's not a good feeling. It really isn't. If I'm a holder of Teladoc at 275 and I'm now seeing it at 31 bucks and it's still dropping, it doesn't really, promote confidence within me to continue to continue buying the stock. So that's where you'd want to, again, pull out your game plan and say, what was my plan for this when I purchased it? Whether it was that I sold if it dropped 5%, or I'm dedicated to the company and I have a plan for, buying more shares at a specific price. But haphazardly buying just because you see it dumping one day or dropping significantly is not a strategy that's going to help you in the long run. It definitely will work against you to your detriment. Of that, I am certain. All right, moving on to PayPal, same thing. Very solid company. I actually own some PayPal. I don't remember where I started buying it, but it's the same idea, and it was purchased in small bits. But again, like I said, I'm not disappointed when I heard that it was, or when I see that it's continuing to go down, because this is an example of catching the falling knife. You look here, nothing here shows that this is the time to buy. Now, again, you may do your research. You may look at some of the growth for the next, year and 5 years in the company. You may look at its earning, what it's trading at compared to historical levels. So it's not to say that it's not a buy right now, but just if you have a mindset that just says, well, it's down a lot, I'm going to buy it, that's probably not reason enough. Because again, it was down here a lot, and if you bought it, you would be down over 50% right now. So again, just having some justification or thesis for your investment and plan is going to help you in the long run. All right, then 2 more. Here we have Square, very similar to PayPal, trading at a high 285 over here. And then you can see, sorry about this ad here, as you can see, it's just dumping, going lower. No strength here whatsoever. Here we see a positive bounce, and then it continues to decline 50% from there, right? 144 to now 71. So again, that's how you identify a stock that's crashing. And then the falling knife is whether you determine to purchase that at a specific point in time. Remember, just because something's down huge, 75% on a quality company, does not mean that it's the end of being down. This could easily go to $40, another 50% drop. Why not? Nothing says it can't. And then finally, Microsoft, same thing. Look at this move. Beautiful. From 140 to 340, so over 100% gain, which, remember, this is pretty, that's the thing too. They say everything that goes up must come down. This is a pretty aggressive move. Let's see, 140, 280 would have been a double. So that would be right here. So it made a move a little over a year. It was up 100%. Now remember, the stock market on average, even the NASDAQ, which is usually the higher performing, it's 12 to 14% per year. So when you're talking about 100% on a company that's in the trillions, this is almost a $2 trillion company. Or I guess at the time it would have been close to $1 trillion. To double in value is significant. So then for it to come back down, again, you can't be mad at that. It's just about having a plan and deciding what your plan is going to be, and not just buying a stock for purposes of buying. So anyways, that was just a quick video. I hope it was helpful in terms of that when we hear that term, how do you catch a falling knife? Or I'm sorry, when you hear that term, falling knife, you definitely don't want to be getting cut by a stock that's going down. Look at your plan, revisit your plan, and if you don't have a plan, quickly establish one, and don't make any rash decisions. If you're down a boatload of money right now, sometimes it's okay to reevaluate your positions. You can either cut your losses, or you can just sit tight and say you're going to wait for the market to recover, right? Key, don't invest with money you can't afford to lose. Don't make rash decisions. Definitely not when the stock market's trading at near, recent lows. Rash decisions can cost you a lot. So just be methodical in your thinking, have a plan, and just know that everything will work out for you as long as you have a plan. All right. Thank you for your time as always. And this is Dr. Diffins signing off. Bye-bye.